Will, news that Iran mistakenly shot down the Ukraine jet, killing 176 people, rile up tensions once again. Joining me now is Peter Hug, Global Trading Director over at Kitco Metals. Pete, good to have you back on. First and foremost, Happy New Year.
Happy New Year, Daniela. Nice to be here again.
Unfortunately, we're not starting on a peaceful note. The latest news from U.S. media is that Iran mistakenly shot down the Ukrainian plane that crashed on Wednesday with 176 on board. Do you think this will now renew tensions that seem to have at least calmed for 48 hours?
I don't think that event in and of itself is enough to provide the catalyst to escalate the tensions between the U.S. and Iran. I mean, it's obviously a horrific event for the people and the families that were involved. I think the Iranian situation with the U.S. is somewhat docile right now, although it could flare up at any minute. I don't believe the jetliner is going to be an issue unless there was some kind of reprisal against Iran for shooting it down, and it wouldn't be the Americans that reacted to that. Believe it or not, it would be Canada, who had half the plane load of the people flying were Canadians.
And Pete, when we spoke during the Outlook last month, you said that President Trump may just, tweet something that could roil markets. Was the drone strike on Iran's top general largely unusual, even for President Trump?
I'm not sure if it was necessary. I certainly don't have any sympathy in who I considered a terrorist being taken out. But I think Trump probably did it for the wrong reasons, and I think he was trying to deflect from the issues that he is having with the impeachment and some of the other issues that people are bombarding him with. So Trump, in his presidency, has had a tendency, whenever there's a little bit of heat under his seat, he tends to do something to deflect attention. I think he underestimated Iran's response. But again, the entire Iranian response just looked orchestrated as well. Obviously, it had an impact on the gold market. It moved it up. But, first of all, they warned Iraq the attack was coming. They sort of indicated where the bombs were going to hit. They called a number of other embassies that communicated with the U.S. to ensure, to the best of their ability, to get U.S. military people out of the way. And then immediately after they let the missiles fly, they made a phone call and said, "That's it, we're done." So they had to save face, so I think right now tensions are still sort of simmering, but I think they've died down, and I think you're seeing that impact in the gold market. Prior to this Iranian issue, on Friday of last week, gold was testing up and pushing up against 1555. We thought the price had overextended itself, and we're actually looking for weakness coming into this week. And then the Iranian attacks happened with the reprisals, and that caused gold to spike to 1613. But here we find ourselves again back at the same level we started at Friday before this Iranian issue. So right now, gold looks a little suspect. I wouldn't be aggressively chasing it. I'm looking for the market to consolidate here, and if it consolidates here, I think the next push to 1600 will be a real push.
I'm happy you brought up gold, because I think that's what most of our viewers eagerly wanted to know from you, Peter. Is how high could the metal go from here? Last December, November, we were talking about how trade wars, Brexit would, and ultimately the Fed would move gold higher. And now this has kind of also been added to the equation here. So, is it really going to be the year of the safe haven, or is it too early to tell?
It doesn't necessarily have to be the year of the safe haven. I mean, we were constructive gold coming into 2020, and we continue to be constructive this market. So when I'm speaking to you right now, I'm speaking to you from short-term perspective. That gold going back down to the 1520 level is certainly within the realm of possibility. Our constructive outlook for 2020 on gold was premised on our belief that the equity markets were going to run out of steam, and we may continue to see strength coming into the first quarter. We also believe that the global economies are not as strong as people are anticipating, and I think the Fed is likely to be lowering rates again before too long, probably after first quarter. And I think the European central banks have made a decision that they want to hold rates, possibly raise them. So in that context, I'm looking for a weaker dollar starting second quarter of this year. And I think that in and of itself could be enough of a stimulus to get gold carry above the 1550 level and get it into the 1600 sort of by mid-year.
Pete, let's get your thoughts on silver now. I know you said you were buying your kids lots of silver coins for Christmas. How do you see this metal?
Now, they may be watching this and
saying, where is it?
Again, my context on silver was that I think silver, from a perspective of relative to gold, is going to outperform gold in 2020. I still believe that is going to be the case. As you know, I've been very constructive the silver market, anything south of $17. When we last spoke, it was at $16.80. I strongly recommended a buy there. Again, at these levels here at $18, I'm still constructive the metal. But I would really like to see gold stay above that 55 level from a technical perspective, work its way up to the $15.75, $1,600 level. In that context, I see silver touching $19 at a minimum.
All right, let's round it up now, talking to PGMs, because your son Matthew might just want you investing in rhodium for him, Pete. Crazy
well, again,
numbers.
as you know, Daniela, for the past 2 years, we've just been blowing the horn saying that rhodium is extremely undervalued. There is going to be a shortage in the market, and we see considerable upside potential, especially when the market broke through that 2,400 level. That was sort of our trigger. It hit $8,000 an ounce yesterday. It's backed off a bit. It's trading in around 7,400 today. But from everybody we speak to in the industry, and that is not a lot of people, I can count them on one hand, that are involved in the rhodium market, there is a serious shortage of rhodium in the current market. The South African supplies with their electrical issues have almost dried up. If the economies continue just sort of to muddle along at 2% where they are now, just car demand alone is going to continue to demand rhodium product, and there is no product on the market. So rhodium has the potential of going parabolic, and by that I mean it could go very quickly to 15,000. I don't see rhodium collapsing here below 5. So again, if you've got the wherewithal to buy rhodium at $7,500, I still think it's a good buy.
It's just, so under the radar, right? Like no one's talking about this crazy rhodium story. And as we know, rhodium's all-time high was 10,000 when there was an electricity crunch in South Africa. But the experts I spoke to yesterday were saying it's really China buying up a lot of rhodium right now. So you mentioned you're seeing that as well?
I'm not seeing so much rhodium buying out of, actually, I'm not seeing any rhodium buying from the retail investor, which is really interesting. What we're seeing is it's commercial buying of rhodium that's causing this price to spike. What retail investors are doing that have been in the rhodium market are actually liquidating into the strength. I've seen very few retail buyers, and there are rhodium products on the market.
Right.
We offer accounts in rhodium, we offer bars, we offer coins. And there are ETFs offered by Deutsche Bank and ICB Standard Bank out of South Africa offer ETFs on rhodium. So there are ways for investors to participate in the market. But with this strength, and it's similar in the palladium market that's also moved up over, touched 2,200 overnight. And it was trading at 1,500 a little over 2 months ago. There's nobody chasing palladium from an investor's perspective. They're using this as an exit vehicle and selling it into strength.
I think the issue on the retail front with rhodium is that's just it, Pete. Is people or investors just maybe don't know how to invest in rhodium. How do you take rhodium home? But as you said, there are solutions.
There's bars
for
and coins. There's legal tender coins, and there's bars made by recognized global mints that make rhodium bars. The most prominent manufacturer of a rhodium bar is a company called Baird out of Germany, BAIRD. They've been producing rhodium bars and supplying the North American market for the past almost 8 years now. So getting rhodium, physical rhodium, from an investor's perspective is relatively simple. One thing you need to know from a Canadian investor's perspective is that rhodium, unfortunately, is taxable. Not only do you pay the price for the rhodium and the fabrication for the bar and or coin, but you'll also pay both provincial and GST, which adds another 12 or 13% to the number. And at these levels, that's another $1,000 an ounce. But for American investors, there is no tax on rhodium bars or coins. So, you can get in relatively close to market, in around the $7,800 level currently, based on the spreads, if you want to participate in the rhodium market.
Well, I think I tweeted that the other day. It just might be the Bitcoin story of 2020. Thanks for that really good information you just provided us with, Peter. And we'll see you soon.
Great. Pleasure. Take care.
And thanks for watching. We will be back tomorrow on Kitco News.